The bigger picture backdrop for the economy is one of positivity. Generally speaking, the jobs market is still good. Inflation seems to be something that some folks are declaring victory over. So does that mean the Fed can wait a little bit longer before it embarks on its rate cutting campaign, if that were to happen?
Yeah, absolutely. So I will say I agree with you. The economy is looking reasonably healthy. I will say we've been in the no recession, soft landing camp for a long time since the first quarter of 2022, and it looks like that's playing out. I do think, though, there are some cautionary tales about when the Fed is going to cut. The market has gone from thinking no cut in March to thinking more than a full cut priced in and now back to less than 50-50. I think the last GDP print, the retail sales report for December are all cautionary tales for the market that there still is some momentum left in this economy. And so the Fed, they're going to have this internal debate about when to cut. Our baseline is June. I can see an argument that it might slip to earlier, maybe the May meeting, but we think the next couple of prints are going to give the Fed a reason to sit on their hands just a bit longer.
And Seth, if you take a look at the reasons why you laid out, there's at least a little bit of leash, a little bit of latitude that the Fed can take with regard to this. What is the case to be made of why the Fed would want to move ahead that timetable and cut rates sooner? Is there any reason why they would? Why is the market thinking that they should?
I think if I was going to make that argument, it would have to be for one of two reasons. One, there are plenty of people still in the market who thinks the U.S. economy is going to go into recession. And to be honest, you cannot rule that out. And so part of the market pricing is probability weighting on different scenarios. And so in the event that our baseline view is wrong and the economy does slump early in the year, then maybe they cut more. And that's part of what's reflected in market pricing. I think the other sort of more direct channel, though, is inflation has come down. It's come down a lot. It's come down a lot more than the Fed was expecting. And so if the committee could get comfortable that inflation has not only come down a lot, but is no longer a threat, then maybe they move forward the rate cuts just to make sure that they aren't the ones that cause any damage to the economy. It's not our baseline view, but I could see someone making that argument.
Seth, I understand that you really think it's time for the Fed to change the language around its expectations for inflation.
Well, I think they've done a reasonably good job sort of updating a bit over time the language that they have in their post-meeting statement. They said that inflation's come down, but it's still elevated. At some point, once we get the run rate on inflation, the 12-month change back down below 2.5%, the month-on-month run rate for core PCE has actually been quite low recently. We think it'll tick back up. But at some point, they're going to have to confront that question. How long do they keep saying that inflation is elevated? You know, again, in my experience, I spent 15 years at the Fed, part of it writing drafts of those statements. I think they'll wait as long as they can, make as few changes to the statements as they have to until the data basically compel them to make that change.